Now, as a matter of fact, you know what? I can probably run it on my phone. The issue is obviously we can't hear the CBC if we have the charts up at the same time. But this is what we're looking at. I like a lot. Big run up here. Big outside chance that we pull back, right? We've had such a big run. I think there's a chance we pull back, but there's also the chance that guidance. Because we have two things: the big Tesla bulls don't really care about the markets because they're looking for MSD, supercomputer, Optimus Bot. They don't want to care about that. They're already long the stock. It's going to be the analysts coming in from Wall Street, margins, activity on margins, growth at a record high, and better than a little bit of earnings. So this is basically daily chart, and maybe go back a year ago, right? Back a year ago, we're still, even less than a year ago, we're still at the same area, right? So Tesla price cuts were smart. Dan Ive says, yeah, this is going to be interesting. This is going to be interesting because those, like I said, those margins are expected. Oh, is this it? Who is this? Oh, almost had a heart attack. Thought I missed it. What up, Asan? Oh, you can't hear me? Is it bad? Hold on. Barely saw that. My bad. Here, let me just pull this back. Hey, let me guys, you guys give me a sound check. Can you hear me on? Tell me if you guys can hear the CNBC when I turn it up. I'm pretty sure you guys can't hear it. Just let me know if you can hear it. Okay, that's what I thought. Yeah. So if I do the news, I'll basically just switch it up then. Once the earnings come out, I'll just switch it up to. We'll switch it up to this view. You guys should let me know if you can hear this.
Squawk Box exclusive. You do not want to miss. We'll have him tomorrow morning, 8:30 Eastern time. We'll talk to him about, again, United beating the street on the top and the bottom line, and by a wide margin on the bottom line, guys. Back to you.
That's right. And to your point, the raise for Q3 as well. Phil LeBeau, thank you. We'll see you shortly for Tesla. In the meantime, Netflix earnings are out. Julia Borson has those numbers. Hi, Julia.
Well, Morgan, we have a beat on the top, on the bottom line, and miss on the top line. Earnings coming in at $3.29 per share versus the $2.86 estimated revenue.
Ooh, that's Netflix with the big beat. They missed on revenue though.
And that analysts had estimated, but we are seeing a big beat in terms of subscriber additions. The company saying it's seen net adds of 5.89 million. Analysts had been projecting about 2 million new subscribers. So big beat there. We're going to be digging into all the commentary here about the launch of paid sharing. That's the crackdown on password sharing and the impact it's had both on subscriber growth, but also revenue per user. We'll be back with more on that. The stock is down about 1.5%.
Stock's moving around quite a bit, Julia. Thanks. You mentioned Netflix is down just over 1%. United higher by more than 3.5% just at the moment. That's the initial reaction. Victoria, to you first, reaction on this. We saw the banks mixed, but overall the KBE and KR.
They retained their earnings. Netflix did retain earnings, but they missed on revenue, which is expected. I mean, economy slowing down. But that's a good beat on EPS. That's the bottom line that they beat on. Right now, I'm looking at the price. We finished the day at 475.
it sold off to 448 and then got up to 459. So a lot of volatility in Netflix right now. We're looking for those Tesla numbers though coming out pretty soon here. So a lot of volatility there. Let me see if I can move this over here. Yeah, there we go. Actually, no, that'll be better right here. So we're getting a lot of that volatility. As long as you guys can hear, we'll get those Tesla numbers out pretty soon. And also, let me keep. I'll let her talk.
Momentum back. They're done getting distracted, and we all know investment banking will kick back up at some point.
All right, and we're seeing Netflix bounce between negative and positive right now in the after hours. Julia Boorstin has more color in terms of the guidance for Netflix. What is it, Julia?
Yes, so the guidance is also mixed. We had mixed results in terms of top and bottom line, but also in terms of guidance. The company is saying it sees third quarter earnings per share above expectations, $3.52 versus estimates of $3.24. But revenues they see coming in lighter than projections at $8.52 billion versus the $8.68 billion estimated. But the company in its commentary here is saying that the launch of paid sharing is working, and also that they are going to be rolling out paid sharing to almost all of their remaining countries starting today. So it's working well enough that they're going to continue with it. And they're also saying they see continued steady growth in their ad-supported plan. So those are two of the key issues: paid sharing, ad-supported. I'm sure we'll get more detail on the call, but they're saying that these two initiatives seem to be playing out and paying off for them.
Yeah, and of course, one kind of feeds the other. You push more people to take on more accounts. Maybe they start thinking about it from a more budget conscious standpoint. Julia, thank you. Adam, I want to get your reactions to that, especially when you did see net new ads almost 3 times greater than the street had anticipated for Netflix.
Yeah, very impressive net ad numbers. Obviously, we'll have to dig through some of the details as to why the top line fell a little bit short, but that stock had an enormous run into this release, and the fact that it's flat to down small is a huge victory. So I think the core numbers are very healthy.
Yeah, they smashed subscriber numbers, so who cares about the EPS? Next, we're looking for Tesla, right? We're looking for Tesla here, and for Tesla, we want to see. There it is. I think the news about to come out. Tesla just beat. Let me put up the Tesla chart now. Ooh, they sold off to 280. All right, we should be hearing the Tesla beat right now. All right, so Tesla, let's see if they roll it out. Tesla, there it is. Breaking
John,
news.
we've got a beat on the top and the bottom line. Tesla earning 91 cents a share. That is 9 cents better than expected for the quarter. The estimate was for 82 cents a share. Revenue also coming in better than expected at $24.93 billion. The street was expecting $24.4 billion. Operating margin of 9.6%. But remember, what we're looking for are the gross auto margins, excluding zero-emission vehicle credits. We have not come across that yet. One interesting note, though, Tesla is not changing its guidance for full-year delivery, still keeping it at 1.8 million. There had been some speculation that the strength of the first and the second quarter, along with the expectation of increased production in the second half of this year, might lead the company to increase its guidance. But at this point, they're sticking with deliveries of 1.8 million vehicles. Guys, back to you.
Phil, how usual or unusual is it to see Tesla change delivery guidance?
I did not expect it. I talked about it this morning on Squawk Box. If they're going to do it at any time, Morgan, likely they would do it after the third quarter. I just think this time of year, I wouldn't expect them to do it.
Okay.
All right, Phil, thank you. Tesla right now higher by about 1%, but it's been bouncing around, as have many of these. Mike Santoli back with us. Netflix a little bit lower, Tesla a little bit higher.
All right, we're waiting for those gross margins to come out right now. I'll read you the news. Tesla. Let's see, Q2 EPS 91 cents, beat estimates of 82 cents. Sales, they beat on top and bottom line. That's good. Good news. Q2 revenue 24.9 billion, 40% higher year over year. That's a big, dude, 40%, almost 50% higher year over year. Very strong. But we're waiting for those gross margins. That's the real
content or not. So seems steady as she goes for both of those in terms of the reaction. And by the way, also on UAL, given the magnitude of the beat that was just reported in EPS, the guidance for the full year raise is again relatively restrained because you have to filter that into the year-end numbers as well.
Absolutely. Taking that into account, Mike. Thanks. And now we're not done. IBM earnings also out. Christina.
All right. Says now testing Cybertruck vehicles around the world. Who is this? IBM? Who cares? Testing Cybertruck vehicles around the world for final certification and validation. Quarterly profitability negatively impacted by reduced ASP due to mixing prices. Right now, price is up. We're at 295. So we're back at the daily high for Tesla. Price is moving up. We'll look at that. We'll look at that price action in a second. I'm just waiting for them to talk about the gross margins. Here it is, 9.6 operating margins, down from 14.6 year over year. Cites reduced ASP due to mix and pricing. Cost of production ramp. 464,680 sales increase in OPEX driving Cybertruck. Okay, so that's a operating margin. We're looking for the gross margins though. Where are the gross margins? That's what we want to see. Production, okay, greater Tesla 2, Model 3, greater Tesla operating. Waiting for the gross margins and the guidance, which we might not get. No, we should get the guidance. We're just not going to stream the actual earnings call on here. See who we got on the earnings call. Tesla should rip the top. These updates, but not much action. Yeah, we're just at what, 296. I think that was during the day. I'm waiting for them to get back to the guidance. We want to see the guidance. Keep my eye on the gross margins. So we basically hit 299 today on the Tesla price. And we hit 299. We're at 296. It's very volatile right now. We're still waiting. Operating margins. Where are the gross margins at? Where are the gross margins? Operating margins 9 points. So they're down on operating margins because probably the Cybertruck production pouring a lot of that CapEx into production, which is going to be a hurdle for some of the Wall Street analysts. All right, yeah, let's get to those gross margins. Still waiting on the gross margins. But hey, we beat on top and bottom line. That's pretty good. Stock is up a lot though. We've been running up a lot, so there could be a meaningful pullback. Now, if there is a pullback, that's fine because there's a lot of the big seven already beat. So the Nifty 50, no, it's not the Nifty 50. A lot of the great companies already at near all-time highs, and so I think there's a lot of room still here for Tesla. All right, now we're selling off. We're under 290. Waiting for those gross margins still.
They have to stay on the call.
All right. Of course, shares of IBM trading just above the flat line right now. Yeah. We got another earnings mover out right now. Las Vegas Sands. Contessa Brewer has it.
Okay, we don't care about Las Vegas Sands. Yeah, that beat pullback manipulation. Yeah, I mean, the stock's up a lot. I think the biggest catalyst is going to be guidance. It's going to be where those gross margins at. I think the last gross margins were, well, can we beat the gross margin estimates? Not only that, what is the guidance going forward? That's going to be huge for Tesla. What is guidance going forward on the operating margins? And look, this is just, or not operating margin, gross margin. This is just the revenue stream, right? The big catalysts are going to be, what do they say about the supercharger network? How are they going to monetize the supercharger network that is taken over? How are they going to monetize that? Also, the Optimus bot, right? They say that's actually working in the factory. Currently, they're using the Optimus bot to optimize their production chain. So we'll see how that actually works its way out. And then FSD, full FSD, which is going to be on the earnings call. What do they say about full FSD? Here we go. No, that's not it. Operating margin remain healthy at approximately 10%. Okay, that's operating margins. Not much change there. Price is down. Waiting for those gross margins and the guidance. Still waiting for that. Anyway, well, price action's looking solid. No, I'm just kidding. It's selling off right now. We're beneath opening price. It's looking bearish at the moment. Still waiting for gross margins. Still waiting for gross margins. Might get some support at 285. Let's see. So we pulled back into, what is this? Just last week or early this week support. Okay, we're getting some more news here. Tesla AI development entered new chapter with the start production of Dojo training computers. That's the other part. Dojo, the supercomputer Dojo, which is kind of is pretty much in the same category as all these generative AI catalysts that you keep seeing in Apple. Oh, here we go. Here we go.
Little bit on earnings, but I think what they're doing is so smart. They're driving people to the ad-based tier, which is priced 15% below the paid sharing. So they're driving brand new subscribers that maybe have been leeching on to actually having their own profile, and eventually they may move through. I want to see what their average revenue per user ended up being.
Okay, I guess not. They just flashed on the screen. Operating margin 9. Yeah, we already got that. We're looking for, well, they're talking about Dojo a little bit. Dojo is going to start Dojo supercomputer. And hey, word on the street is Dojo is the.
And I do think they're well positioned with their.
All right, Adam, I bet you weren't expecting me to ask you about United, but
word on the street, Dojo is the most powerful supercomputer. And we'll see how that actually plays out. We'll see how Wall Street plays that out. Gross margins, where you at? Guidance. Those are the big ones here. Hey, everybody's beating though, right? S&P overall, so far we're getting a lot more beats on the expectations. Still waiting for those gross margins to come in. Don't care about United. I'll let them talk and then they're talking about United, but whatever. I'll let them talk and then we'll get into, actually, no, I'm just going to talk. Here. Let's see if we got anything. Well, we did beat on top and bottom line. Where are those gross margins? Still haven't seen them yet. That's a pretty good beat there. Hey, price action is supported. There we go. Report 47% rise in sales for its second quarter. That's huge. Remember oh, here we go. Operating margins.
The street for automotive gross margins.
Phil LeBeau's got
Here
more.
Here we go.
John, we said the magic number to focus on was 16.9%. That was the estimate on the street for automotive gross margins, excluding zero emission vehicle credits, the estimate from Wall Street. Tesla reported automotive gross margins for the second quarter coming in at 18.2%. So better than expected. Now still down compared to where it was in the
Let's go
quarter, which I think came in at 19.3%. So you're still seeing the impact of the price cuts and the margin compression there. But remember, the expectation is that this is the trough. Here and maybe into a little bit of the third quarter are the trough in margins, and then it is expected to accelerate, especially as they get the economies of scale and they're bringing down some of the costs on the battery manufacturing. So that's the expectation on Wall Street. Again, automotive gross margins, excluding zero emission vehicle credits, coming in at 18.2% for the second quarter for Tesla, better than expected. Guys, back to you.
And as you're talking, the stock is moving higher. Phil LeBeau, thank you. Shares of Tesla turning positive right now, up close to 1%. Mike Santoli, I want to bring you back in this conversation because Tesla is really the first mega cap tech.
Yeah, let's go. Operating so we beat expectations on margins. We're pre-market, still moving up. Again, it is pre-market, so I mean aftermarket, so we don't know, but that was a good reaction there, beating the gross margins. And this is what I'm saying is if we bottom in margins, that's it, right? The street's going to come in and say, okay, that was the bottom of margins. They gained market share. Best selling truck, our best selling car was the Model Y. Deliveries beat a record, revenues up. We beat top and bottom line. And those margins, if they are bottoming, that is the sign, right? If S&P as a whole bottoms, the whole market's going higher. So operating income decreased due in part to increased operating expenses driven by Cybertruck. Yeah, they're some of that operating income is going towards the Cybertruck production. So hey, note, it's not like they're losing demand. Just to create other stuff there. Tesla factory in Germany produced standard range Model Y vehicles in Q2 for the first time. So we're barely getting the standard Model Y in Germany. Imagine when that goes on full line, when that comes on, when that comes online fully, that there you go. More production, a little more demand in there. So right now price is back to the aftermarket highs. Hey, we beat those gross margins. Let's hear what this dude, Phil LeBeau. I think no, it's not Phil LeBeau. Mike Santoli, see what he has to say about the Tesla margins beat.
Stock, if you will, to report this earnings cycle. I mean, margins better than the street had expected here. Stock's up 140% year to date. I mean, does this set us up for strength in the other big growth names that have already seen sort of big moves in the stocks already, or is it sort of its own dark horse?
Well, it's always kind of operating based on its own forces, but I do think that the idea that the market has rushed to a place of building in some pretty good results in the stock prices, and therefore, the bar is relatively high to really impress the market. That's probably the same for a lot of these stocks. I do find it interesting with Tesla. First of all, John's talking about the options implied moves. Don't foreclose on the idea that through the conference calls, there's going to be some reason that these stocks like Netflix and Tesla do get a charge in one direction. There's going to be a ton of talk about AI. I trust on the Tesla call. See if the street is receptive to that. But what I did find interesting is as they in their shareholder letter talk about operations, Tesla says we are focusing on cost reduction, new product development that will enable future growth, investments in R&D, et cetera. Cost reduction listed first. So clearly they're trying to pay attention and be responsive to the idea that they are being watched for the margin performance.
All right. Adam, Victoria, Mike, thank you for kicking off the hour with us. Up next, Evercore ISI's Mark Mahaney reacts to Netflix results.
All right, so definitely not above. Maybe somebody else comes and talks about this. So we're gonna switch it to the chart. We're not yet above the pre-market highs. I'm sorry, the after hours highs yet. So here's our charts. Put myself down here. Here we go. Right, and if some more news comes out, we'll keep looking at it here. So yeah, we'll check that out. Anyways, here's what we're looking at right here. We are on the downside, right? We are trading on the downside right now. Not good enough yet. I mean, we are up a lot, but this means nothing. All you want to do is see the reactions, right? We traded lower. You got the beat on the top bottom line. We traded up. We traded back down because of the operating margins were lower than the previous quarter, but then we beat the expectations for the margins, went higher. So next is guidance, right? What is the guidance looking like for this? Might be the bottom of earnings. That's really what the street needs to digest. Is this the bottom of EPS or the bottom of the margin degradation, right? And that was just from price cuts. So we'll keep that in mind. Of course, the earnings call is going to be maybe more impactful or add some juice to the price. Anyways, yeah, let's go. We got let me see, World Citizen, what up? 18.3. Nobody else grows in the car industry. Give Tesla a ride to the moon. 100%. Nobody else is growing as fast. They don't have, debt. They have the revenue growth is insane for Tesla. The margin growth, revenue growth is just insane compared to other companies. So it's really not close. And especially when they get the price down for a Model Y or the next model, they might be talking about another model that's down in the $20,000 price range, maybe in 2024, 2025. So I know they're talking about that, but for the most part, yeah, things are looking solid. Let's see. I want to hear a little more on the guidance, but we might not hear that until the actual earnings call, which is I think at 2:30. It's in like an hour. But yeah, we were just going to look at EPS, top line, bottom line revenue, Tesla beats. Is there any more analyst here to talk about it? I don't think so. So here's what we're looking at right now. Who's this? Netflix. They keep talking about Netflix. We need to get above 295. How many of you guys are long Tesla right now? All right, let's do some technical analysis to see where this thing might go if we do pull back, right? Still possibility we pull back. But here we are, right? Here we are. And I think on a technical basis, let's clear this draw set. We'll go ahead and clear this draw set. On a technical basis, what are we seeing? We're seeing this is a big breakout pattern. Okay, no matter how you no matter how you look at it, this is a gigantic breakout for Tesla. And so what you get here is a descending wedge. And if you really pay attention, what you're also getting is a cup and handle, right? You're getting this big downwards cup and handle You're getting a gigantic flag pattern. And when Tesla moves out of these flag patterns, you get a lot of momentum. Yes, the RSI is extremely, see if I can get that RSI on the board. Yes, the RSI is extremely overbought, but it doesn't matter when the whole market is moving higher. As you've seen before, right? The RSI can get extremely overbought and still move up, right? It can still move up to 93. Are you kidding me? So when it does get overbought, it goes up, pulls back, goes up. And so it can push this for a while coming out of this bear market, especially if margins are starting to bottom. You're looking at the trough, you're looking to nothing but upside from here. And it looks like sales are going to be well. So we're barely getting on the weekly. Is this the weekly chart? Yeah, we're looking at the weekly chart. We're barely starting to get into overbought territory. And is that a red flag? Well, it is with most companies, but not with Tesla, not when the overall market is starting to push out. Will we see a pullback? Sure, we'll see a pullback. But again, like I said, in the past, we've had gigantic moves to the upside on the weekly chart. So we got to keep our eye on that, right? Now, coming back down, what do the moving averages look like, right? If we do pull back, let's say Tesla does pull back, let's look at these quarterly moving averages. So this would be looking at the 50, the 200, or no, this isn't the 50. This is the these are the quarterly moving averages. So in blue is going to be the last quarter of average price. In yellow is the last 2 quarters, and red is the last 3 quarters, and they're all pretty vertical. This is very strong bullish price action for Tesla, right? As for the most part, as far as momentum, the options activity, you count in all the emotion, all the animal spirits. And I know people say, oh, animal spirits don't count, they don't matter. Well, guess what? It does. You have to have this relief rally to the upside to resolve all that emotion first, which is I'm missing out, I'm not in the market, I missed out on Nvidia, I missed out on all these other plays. And really, we are at resistance, right? I say the way I'm looking at Tesla right now is we do have a lot of resistance from 315 down to about 300, and 300 was that previous high that we had back in 2021, I believe, right? So we're right there right now. We're right there now. So if we take those 2 highs, right, 2021 and then 2022 highs, we're pretty much there, 300 to 315. So what I'd say is, hey, if we can't get above this level, we probably do sell off, right? Whether that's today, whether that's tomorrow morning, over the next couple of weeks into the next quarter, we're probably going to sell off. But if we do happen to gap above this, which may or may not happen, that's lights out if we gap above this. And the earnings call is going to really, take precedent. It looks like we're just not above it. That wasn't good enough yet. We got to get the earnings call. That's okay. But again, we might pull back. So where do we pull back to if we do end up pulling back on Tesla? Where's a possible area of support, right? Looking at these quarterly moving averages, I like to go to the 4-hour chart right now and look at, let's go to the 4-hour chart and put up the 100, 200, and 50-day moving averages. Those are going to be important to look at for Tesla. This is the daily chart. You can also see that triple golden cross here. This is a triple golden cross. You get the 50-day crossing the 100, crossing the 200, and then you have the 100 crossing above the 200. That's a triple golden cross, and it's fanning out. So that's extreme momentum. Regardless, it's really hard to stop these trains. You got to have something negative. Did we get a negative earnings report? No. We got top line beat, bottom line beat, revenue margin beat. Everything beat on Tesla, right? So get excited. Maybe it does sell off. Maybe we do go lower, but for the most part, the momentum is in your favor, right? The momentum is in your favor. The probability is price keeps going higher because there's a lot of people that are just not, in. And I mean, fund managers, they're underweight in general. Okay. So this is our resistance level right here. 300 to 315 is the big resistance. Over that, once we get above that, it's over. We're going to all-time highs, right? This year, as long as inflation remains tame, we're at 3%. Okay. That helps with margins. And think about this when it comes to margins for Tesla or anybody going forward. The producer prices are at 1% right now from 11% last year. Last year, we had producer prices at 11%. Now we're at 1%. That's a 90% reduction in inflation on the producer side and manufacturing. So commodities are lower. All the materials that Tesla has to buy to run their business got cheaper. So margins will improve, at least from here, maybe not this quarter, but margins are only going to be able to improve, or at least the revenue is going to improve because prices are getting cheaper, right? Or at least the inflation in it is coming down. So we got to keep that in mind too. Margins should degrade, and I'm not degrade. I'm sorry. The prices of stuff should come down, and then overall inflation's coming down, right? And then you have the Fed at pause. So this is, this is it. Okay, pullback. Let's get to that pullback. Where could we come into if we do start to pull back? We got to keep that, because there's a possibility we do pull back over the next month, right? I think you need the overall market to really pull back, not just Tesla. There is a gap to fill here at 261. Okay, so we could come to 261. If not, we could come back to 241. And then you have 234, 235. I really doubt we come that low unless the overall market rolls over. We could come back to 261 without the overall market rolling over. If the overall market rolls over, the Qs and the SPYs, then we probably come back to 235 and we check that. If not, if the market keeps chugging higher, we do have more earnings coming up, then I expect Tesla to just explode through the resistance levels, right? Maybe consolidate a little bit before and then explode through those resistance levels. 281 is the next level. And as we speak, right, are we selling off hard? We'll see. That earnings call is going to be important coming up. So we'll see how that actually fares. Let me jump into, did we get anything else? 47% rise in sales for its second quarter. So yeah, just take that in. Cybertruck updates. But the call is going to be important, right? We're Cybertruck. How far are we with Cybertruck? How far are we from producing Cybertruck? What do the revenues look like? How are you going to spend the revenues for, how are you going to monetize the supercharger network now that we've gained dominance in that? And then also, ooh, yeah, that's good. That moving average. We have moving average support here too. I forgot to look at that. And then also, how close are we to full FSD, full self-driving? How close are we making progress on FSD? Who's this? Breaking earnings. Earnings alert for who? I don't care. Anyways, yeah. So 281, I could see us pulling back to 281, going up from there. We got the 50-day moving average. We've been showing support on that. And then we have 270. We have the 100 daily moving average. So those are our levels right there for Tesla. Those are pretty much the levels. It looks like we will stick here. So IBM, Tesla, 5:30 earnings. Yeah, so the earnings call will be in an hour from now. I will not be covering the earnings call. I got some other stuff to do. But yeah, thanks for joining. We beat top line revenue, bottom line revenue. Let's go. Any questions before I close out the stream? Any questions before I close out the stream? Make sure you guys listen for guidance, right? Guidance going forward. Make sure you listen for, let's see, Tesla Q2 earnings. Make sure you listen for guidance. You listen for what they're going to do with the dojo, right? How's dojo ramping up? Are they going to use, there's a lot of big questions. There really is a lot of big questions. Is this the bottom of earnings? I do believe if this is the bottom of earnings, I do believe if this is the, not earnings, I'm sorry, if this is the bottom for Tesla, overall, if this is the bottom for Tesla in margins, it's over. That's it. This is the bottom, right? If they come to the conclusion this is the bottom of margins, which the only reason margins went down in the first place was because they cut production. I'm sorry, because they cut prices, right, to gain market share. So people say, oh, that's negative. Tesla cut their prices, but that's what you do if you're working at a lemonade stand and there's 3 other stands around you and they're taking your customers. You cut prices. You have the best Kool-Aid. You have the best lemonade. We all know Tesla has the best EV on the market. It's not even close, right? It's really not close. Okay, you have people that don't believe that. Either way, you're cutting prices. You're collecting more demand, and that demand will turn into more revenue. Therefore, your margins you're making more revenue even though your margins are lower. So when they start increasing prices back up and they get those better margins, also you got to keep in mind about this. The Optimus bot is important, right? That's why you have to listen to what they say about the Optimus bot, because they're implementing the Optimus bot inside the factory. I saw yesterday a video of them using one bot to basically what it was doing is it was repetitively hitting the seats, and it was saying, okay, let's see how good our seats are, and compared to other companies, how much damage can these seats take? And they replicated like 50,000 pumps, which was into the seats, right, into the seats that you sit on, which replicated like the lifetime of somebody sitting in a car. So they're using they're using AI, they're using bots to increase the product, increase the productivity of production, and that's going to increase margins in itself once they get the price down. Plus, you have the Tesla tax credits, right? There's a lot of incentives. Cybertruck, when does that get released? There's a lot of stuff. The Dojo supercomputer. Word on the street is the reason why Elon has Twitter. He's really interested in Twitter, isn't because of Twitter. It's to run the AI, right? It's to run Dojo and get another generative AI. Twitter has the most I think by far Twitter has the most activity, has the most social activity, the most tweeting activity. And if you can use your AI to collect all that data, now you have an AI, generative AI, better than ChatGPT, better than Google Bard, right? In some aspects, in some, whatever it is. And they're going to use that to somehow merge all the companies or somehow create a new way of, it's really above my head, to be honest with you, but I'm looking at everything they're doing and it makes sense. He's going to come out with a bot. There's probably going to be a Tesla chat bot pretty soon, right? I don't know what soon is, but you do have the Dojo, you do have that stuff. Now, full self-driving is the big ticket. That takes, like, if we come out with full self-driving by the end of the year, that's going to be big for price. That's going to be huge. That's what drives revenue the most. It's going to take us to 2 trillion, possibly 2 trillion market cap. Maybe it takes a year to digest, but you basically take out Uber, you take out Lyft, you take out all taxis, you take out what is it? You get full self-driving delivery trucks. I mean, you eliminate a lot of the competition with that. That doesn't even know they're there. Or maybe Uber and Lyft, what they do is they buy the Tesla cars, right? They have to buy Teslas and train them themselves. So, okay, what are the highlights here? Let's get over the highlights. Revenue beat, EPS beat, Cybertruck update, and more. That's what we need to hear. What is the Cybertruck updates? All right, I'm going to finish off on this. That's about it for me. Look for price maybe to come back in 281. I think that's our next support, 281, right? And if not, 300 above 315, we're going parabolic. It looks like in the after hours, price is still trying to hold up there. It's not selling off too hard. So there is more news coming in. Anyways, we'll talk about it tomorrow in the stream. After I'll be listening to the earnings, and tomorrow we'll go into the stream at 10:30 a.m. 10:30 a.m. Eastern time. We'll be streaming live the entire market. And I think this is wave 2 FOMO, right? I think Tesla does make it all-time highs by the end of the year for more macro reasons. And obviously, something bad has to happen for it not to go this way. But inflation is coming down. The economy is starting to expand in the services sector. Manufacturing is still weak. The housing market is starting to bottom, even though production is weak. The Fed is near pause, right? They're pretty much pausing. They may be having one more hike. So all these forces are coming together. Bond yields may have peaked. The cost of capital comes down. That helps riskier assets that are looking into the future. The dollar is finally breaking down, right? That's always good for a cycle. So you're adding all these variables together, and we're coming out of a bear market, despite what people say. We're up way too much to be in a bear market. And it's a bubble. Okay, well, what's going to pop the bubble? Because when the regional banks popped, what happened? The Fed stepped in, right? Fed stepped in, pump more liquidity. Liquidity drain on the TGA. It didn't matter because money market funds left the reverse repo facility and actually supported the TGA. There's trillions of dollars out there. And plus, the biggest catalyst, I think, is people are just off sides, right? There's people making 5%, but they have to wait a whole year for that in money market funds. And there's $5.5 trillion of cash on the sideline. I think that's the biggest catalyst. So as inflation ticks lower, you have more, you have that cash start to funnel back into the markets, right? To take risk on. And we see a risk on appetite when we look at triple B spreads, when we look at the VIX, it is signaling to us that there's risk appetite in the market and it's coming back because of these risks are disappearing. Anyways, that's all I have for you guys. We'll catch you tomorrow live if you are on, and we'll talk earnings call. We'll see what the Tesla earnings call comes out to. You guys stay blessed today. I'm going to go to the gym. Hopefully you guys get your workout in today. Don't forget to get your workout in. We'll catch you tomorrow early in the morning. Stay blessed. Thank you very much for coming.